In our Principles of Accounting textbook, we again revised and tried to simplify the revenue recognition discussion. Revenue recognition can be a very complex topic, so when we did this new edition, we focused on trying to simplify it as much as possible. For example, we start with a very simple transaction where a customer requests a refund. So that's the simplest. We've sold merchandise to a customer, they keep the merchandise and they're unsatisfied, maybe it was damaged in shipment, they request a refund, and so what we do is we pay them a cash refund. That's the simplest situation. So we debit customer refunds payable, credit cash. And then we move to the next level where in this case we assume, well, let's assume the customer has an account receivable. So we're not going to pay them cash. What we'll do is give them a credit memo, issue a credit memo. And so instead of crediting cash, we credit accounts receivable. And then the next level of complexity is, well, in this case, the customer returns the merchandise. So we have to record that return of merchandise, and we give them a refund or a credit memo. And so we go from simple to complex. In addition, the new edition, what we've done is we've moved the adjusting entries related to customer returns and allowances back later in the text where we talk about the adjusting entry for inventory shrinkage. And so now all the adjusting entries are back there in one place. So we try to move that out of the chapter discussion later in the text where they're better able to handle it. And in addition, one other thing we did in the revenue recognition revision was we integrated the entire discussion within Net Solutions. In the prior edition, we had a separate company that we used as an illustration. But in this edition, we've integrated thoroughly throughout the chapter with Net Solutions, and we think that really simplifies things for students and makes it easier for students to understand revenue recognition.